go, there we go. We're starting to record now. Alright, so I'm not sure if I'm flying solo here. Usually a Monday crowd's a bunch bigger than this. Being Tuesday thanks to Valentine's Day conflict. Alright, so I guess if you want to learn more about what I'm showing here, join the email here, the email newsletter, quantlabs.net/contact. All right, so I did put up an interesting report that was generated by my programming with a new, come on. Okay. Let's see here. I have to chop something. Let me get rid of my Sublime. All right. Don't think I need this. Don't need my word stuff. Yeah, definitely don't need that. Just give me a second here while I clean up the okay, that should free up a little bit of memory. Okay, so let me show you the report I did show. I just gotta navigate over to it. Alrighty, where are we? Okay. Now, on the technical front, I'm using Python to build this. I'm using a package called Quant Stats for this, for those that want to know. And I'm going to show you the output. Okay, so this is what I generated today. First thing we're going to show you is the so-called strategy of the latest basket. I'll show you what the combination is, but this is how it works. We have our benchmark, which is SPY, and then we have our basket, which is this one in the blue line, and that's basically a combination here. But here is the important thing, is the CAGR, compounded annual growth return, 86%, and this is over the last year, for the strategy or the basket. The benchmark, again, which is SPY, would return you 15.29. So 15.29 is fairly strong for the SPY or the S&P 500. But you can see here that we're, I don't know, 4 or 5 times more with the basket than the benchmark. Okay, this is a really strong benchmark. Now, if I show you the markets today, what happened? The markets were generally positive and fairly strong. Okay, the last couple of weeks it's been fairly negative. As I hinted, the S&P over the last few months or 6 weeks since the beginning of the year has been negative. So it's not as strong, but there are other instruments combined that will give you a much stronger return. So here it is. Blue is the basket and the benchmark. So for last year, 2021, you would have gotten this return right here at about, as I said, 15%. I'm just going to let you allow you to speak. Thanks for joining. So this would give you 15% return, and as I said before, the compounded would be 85% in the blue. That's for last year. Now, when you look at this year, which has mostly been negative, as I said, with the stock market or S&P 500, That's negative, okay? You can see that right here on the year-to-date. So the S&P 500 or the SPY would be negative 6.08. But meanwhile, this one in blue again, the basket, is going to give you a return of 16.96. This is how strong this is, okay? So when you look at the monthly return of the basket, since let's say December, you would have gotten a 31% monthly return in December, 11% and 2.61%. So what is this basket I speak of? Now this is the combination here, this right here, oil, SPY, Nifty, which is the one of the indices for India, and soybean. So that's the basket that generated what I'm just showing here, and that's probably the strongest one I've seen yet. Okay, so at any point just jump in if you got questions. So again, that is a basket of oil, SPY, India, Nifty, and the soybean. So when you individually look at these, just for the last few months, here you look at soybean, you can see how just in the last 3 months it's just spiked huge. So that's one of the reasons why you get a massive return like that in the last few months. Oil's another one, really strong. India's been pretty good too. So these have been very, very positive. I mean, India has been flat for the last few months, but when you look at all last year, this was really strong as well. And then of course the S&P or SPX 500, it's been steady. And then since the virus and then the Federal Reserve print money like drunken sailors, it's done well and then started to decline here. So the real drivers is Brent crude, especially soybean over the last 3 months. People always forget about soybean or any of the agricultural products. So that's done really well. So that's why you get this really strong return as more as an aggressive way to trade on top of just general S&P 500, and it's not that difficult because you can use any valid ETF that you can access through your broker. In my case, Interactive Brokers. So that's pretty strong. No questions? Any questions? No? Yes? Maybe? Okay. So I think this is going to be a very short presentation. The next one. So as I said, the market has been really negative for the last few months, the last few days. Let me show you what I mean here. So if you look at my newer domain under this event, I reported the overall market. Just trying to load this in. Okay, that should load it in. Oh, no. .net. Okay. So, we are referring to, let's go under events. This one right here. So, what I am going to show you is the overall returns for just the S&P 500. So, yet again, the benchmark usually is the SPY. Okay, that's the standard benchmark. I would have thought it was the S&P 500, but according to Investopedia, it's the SPY, largest ETF in the world, owned by BlackRock. Now, here's the returns for the S&P 500 as of Friday. 5-day return, 1.8% negative. Monthly, negative 5.2. 3-month, 5.6. And year to date, okay, so that's the beginning of the year, 7.3. So that's how it's been, okay, for the S&P 500. So to be able to find baskets that beat that, which shouldn't be hard to do, is worthy. Now, because of the S&P 500 has been negative, There's a few other baskets you can use for defensive or cyclical kind of markets. Okay, so if I take these out and then look at something like for defensive, we got corn as an example. Now we can also do currencies. Currencies are very good if you have a set of currency pairs that are doing quite well. So when you look at this, we have corn, pound against the Australian dollar, euro against the Swedish krone, and that one is probably the best currency pair right now that I can see. So that's a pretty good one. So these are certain instruments that people forget about. Okay, and these change all the time, right? So this is a Swedish kroner. We're going to look at the monthly view. So considering it's not very strong, but last few months it's been much stronger due to the fact of the markets. So this is one of those safe havens. I would have said it used to be the Swiss franc, it used to be the Japanese yen, but because their debt's pretty high and Sweden's fairly got a cleaner balance sheet, people are putting and storing money in Swedish kroner because it's a safe haven for them. And that shows here when the markets have turned over the last few months. So that's another really good trade. And another one that's really good is corn. So if I showed you corn as another agricultural product, a lot of people never think about this because they always think about, stock markets, gold, maybe oil. But you can see here, corn is very similar to soybean. Pretty strong with that high inflation kicking in, right? So with that in mind, we can also look at gold. I don't know, let's look at, let me just clean up some of these charts here. Now, all those charts I've shown you are monthly. Okay, so one of the stronger currencies for either corn, for gold and silver is in the Canadian dollar. Again, I don't know why, it's just the way it is. So here's silver, you can see it did really well over these 3 months, last 2020, April, May, June, and July. For 4 months it spiked like hard, like really high. Here for the last 3 months, it's been very flat. That's silver. And then when you look at gold, again on a monthly view, that's all daily view. You can see it's been very flat. Let me just pull up the monthly view here. It's been steady, but not really spiking like the other commodities. So it's not the best, but based upon timing, so if you look at the weekly, you may start to see gold kind of spike a little bit. See the daily view. Yeah, so in the daily view, it's been spiking. You can see that in the volume. That's, of course, because of the stock market and other bad news out there that drives up gold, but drives down the stock market globally. So the other one, so we have gold, silver, pound against the Australian dollar, and corn. So let me show you what those that basket will return. Okay, let me just do that, save and run it. Maybe I should save my output file. So I'm going to call this and back it up because I don't want to lose it. I'll call this February 15. Alright, so I'm going to generate the new one that I just changed. It takes a couple of minutes. If you got any questions, let me know. Comments, let me know. Okay, so off it goes and starts running. So this is a defensive play. Now I want to show you the difference between gold and silver. So you have right now 5 instruments that have these. Again, corn, pound against the Australian dollar, euro against the Swedish krone, gold and silver. And I'm going to show you the difference between that and when I take out silver. The difference is massive. Okay, so this takes a bit of time here. Okay. But but this is going to be very, very huge difference, about 20%. Again, this is over a year, just by taking out one instrument. So the U.S. markets, that one I showed you before, this one is really good. I mean, 85% return is unreal. Like that's really no mystery there, based upon the charts I showed you for these instruments. So, wow, this takes a long time. Let's see if it's already generated. Okay, it's not generated yet. Because what it's doing is it's using Yahoo Finance data. So it can take a bit of time. Plus the system's kind of chewed up right now with other processes running in the background. No survey. I've switched over to Visual Studio Code. Wow, this takes a while. Usually it's not this long. No questions, man? If you got a comment, you can speak. Okay, it looks like it's done. Is it done? Not yet. Like I was saying, this is the output of Visual Studio Code that I've been getting. Okay, there's the new report. Let's open this one up. Okay, so here is with the silver, okay? So because I have silver, it's not as strong. You can see here it has a 13% for the basket in blue, and then it's underperforming compared to the S&P 500 or the SPY, okay? That's over the last year. So monthly, it does very well this year, year to date. But if you were to run that all year, let me show that to you in a minute. You can see here the returns, 9% December, 6% January, 7.7% in February this month. All right, so as I said, this is not a stellar performance for the last year. Last few months it's been okay. It did outperform the S&P, but for the year it didn't. But look what happens when I take out silver. So now, I'm just going to copy and paste this again, duplicate it, and show you the difference. Okay, so I'll take this out. So now I'm going to have 5 instruments, each weighted at 25% apiece. Just so you know, I can run another separate script that will optimize these weightings and rebalance them precisely to give you optimal return. So let me save, we run. Let me just as a backup, I'll rename this one. Okay, with SLV. Okay, so I'm going to rerun this one, show you the difference. The difference is massive. Okay, off we go. Yeah, so the difference will be pretty... oh, sorry, I got to make these 20%, not... oh, yeah, 25%. Okay, rerun. This should run no problem. But the difference, in a nutshell, is about an extra 20%. So the silver will bring down the entire performance of that basket I just showed you. It'll bring it down by 20%. So this is why it's important to ensure that you properly weight your instruments and you properly weight them and you have the correct ones. So in my case, these are long only because that's all I can do really. On certain exchanges and brokers, you can do shorting as well, but in my case, I could do long only. So the difference is massive. As I said, it's an extra 20%. I got a whiny chihuahua right here. He's been really needy lately. Okay. I don't know if you can hear him. Okay, so it's going to take a while again. Oh, okay. And I can show you a crypto one, and I can also show you another defensive basket here. So these are various ones, but if you were to look at the larger crypto coins, they're not very good performance. But that's a separate. Okay, so here's our report. Is it almost done? Yeah, there it is. Okay, so again, remember we only had 13% return for the year on that basket. So we've removed silver, and look at the difference. So that was at 15%, the S&P, that's the SPY, is the benchmark, and now we're almost tripling our return for the last year because we take out silver. We include gold, but we take out silver. It just blows my mind when you rebalance one or the other. And this portfolio for last year just eked out the SPY, but it still blows the doors off of this year. And they're pretty strong returns as well. So I just want to show you that. Let me show you another return. So I'll rename that one as well. I just want to show you the different optimizing weighting of these things. The difference between just one instrument. It's crazy. Okay, so now let me just show you this one. The first one. This one's not too bad either. But the one I showed you today was quite strong. So I have various different baskets. Let me see here. I'll just show you one more with the corn. So this one's got corn. That's the UK. This is France, the CAC, and the Japanese yen against the US dollar. Okay, so I don't think this one's as high. But just to show you the different types of baskets you can generate to get pretty good returns that'll beat out the S&P 500 or SPY. Just take a while for it to generate. Now, one thing I keep mentioning is how do you know when to go defensive or not? That's pretty simple. I always talk about the gold silver ratio. You cannot. I haven't seen you can get that available through interactive brokers, but this is the WANDA data. We just continue to take care of this. Okay, let me show you the. Oh, here it is. Gold silver ratio. So as I keep saying, if you want reliability in terms of indicators on when the market will turn to go defensive or cyclical or up or down long term, this ratio is it. Gold silver, you see we can have a rally here, which means it's more risky in the market. So if you went back to 2008 and 9, it spiked because it's high level of risk in the market. The markets were crashing. The Fed stepped in and pumped a lot of liquidity in the market, calmed it down, which brought down the ratio. And then once things somewhat normalized, the risk started to build back up again in the market over a decade. So this is easy money
And right here is when the pandemic hit 2 years ago, and it spiked it, and then they pumped more money into it, the Federal Reserve, and then the risks still continue to move up. So overall, when you look at this going all the way back to 2006, the risk overall in the market and economy, this is global, just keeps going up because of a lot of the countries' debts out there. That's why they're doing the Great Reset, to sort of normalize and bring it all back down, because you can't hide this ratio. That's why we have inflation right now. We never talk about it. So that's a reliable factor, a reliable indicator. And that's why you get the agricultures like corn and soybean doing pretty good. And it's actually outperforming gold, and nobody thinks about it. Funny enough. Okay, so let me see if our report is complete. Okay. So is our report finished? It looks like it is. So this is a totally different basket that we're going to look at. This still outperformed the S&P quite a bit. So you can see here's not as strong as the prior basket, but still it's pretty good. 39% annually against the SPY. And again, most of the performance was over the last few months. As you'll see here, actually it's not as strong, but it was in December. So when you rebalance it and finding these combined baskets, you can get really good monthly returns, which compounds your overall performance. And like right here, 21%, 11.77%. That's pretty strong. But you obviously don't want negative. So these baskets are really important. And again, that basket, and the key word here is they're uncorrelated. They're not related to each other. If you have correlated instruments together, they're not going to smooth out if they're all down. I mean, it's fine if they're all strong, but you still want to try to find as many uncorrelated assets as you can. So here, obviously, corn, the British pound, France, CAC, and the Japanese US dollar are not really related to each other. Let me do the crypto. If you want to see that, just show you how this is not to be relied on. But crypto can do pretty good. Just the last few months, it's not been doing. It's been doing good, but it's not the big legacy coins. But this one's very, very poor for the last 3 months because of obviously crypto's either gone flat or dropped. So we got here Bitcoin, Ethereum, Ripple, and Litecoin, the big ones, the legacy ones, all equally weighted at 25%. And then if you want, I can do this one. That includes the UK, USD, Japanese yen, the S&P 500, UK, and 2 other currencies. But it's just the whole point at the high level is to show you the importance of these baskets and knowing how to rebalance them. If it's once a week, if it's once a day, once a month, depends upon you. And also really comes down to your level of risk based upon your risk profile. Obviously, you don't want to go too aggressive if you're close to retirement. So as opposed, this kind of basket's not really exactly aggressive, holding oil, SPY, India, Nifty, and the soybean. That's not aggressive. Where it does become high risk is if you have an account size of, let's say, over 100,000, $250,000, or $1 million, you don't want to just hold 4 assets in all of those for that amount in an account. What I'm thinking of is, if depending upon your risk, you could hold 100,000 at most and have a basket for that per 100,000, and you can have 5, 10 of these different baskets within your, call it master
portfolio. So I think we're done here. So output, yes, that's a new one. Okay, so this is the I think this is the crypto. Yeah, so this is the crypto now. So remember, this is Bitcoin, Ethereum, Ripple, and Litecoin. So up until last year, it did amazing. Okay, and it's not recovered up until probably May of last year. Okay, those four. So if you were holding an ETF in crypto, you would have gotten slaughtered, specifically holding those four large coins. You would have had an abysmal year since May. But up until that point, you would be up to almost 200%. I mean, there's a lot of volatility there, but you could have done well. And as you can see here, really bad years for both 2022 and 2021 for those crypto pairs. Not good. But let's look at the monthly return here, where they're very strong. Look at this. Very volatile. Negative 70%. I believe that's February last year. 100%, but this was the big month in April. And then it crashed. And I had another 135% back in August, and October was a good month as well. Everything else was not good. But look at February, 75%. So crypto has come back. Very volatile. So holding a lot of crypto using those four pairs, you'd be crucified. But overall, up until here, you would have done pretty good. But let's look at the more short-term returns. Yeah, it's all, well, actually month to date, just for this month, look at, you'd be up 75% for crypto, those top four, and you'd be down for the S&P. Huge. Any questions? If not, I can wind it up pretty soon. Any questions at all? Comments? So I just want to show you the difference here. I mean, I could do this forever and ever. I could even bring in the stocks as well, but I prefer to hold the indices. They're just easier to manage, and especially when you get international exposures, I've shown as well that do outperform the U.S. No comments, questions. I'll wrap it up. Nothing? Oh, go ahead, man. Can you repeat?
Thank you for the presentation today.
Oh, no problem, man. This can help you out for retirement.
I know.
And these are mainstream assets. So, if nothing else, I'll give it a wrap. I'll be doing another one tomorrow night. Okay. Thanks for coming out, man.
Anytime.
Okay, have a good night. Bye.
Good night.
Bye.